Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 3rd of April. Starting off with the FTSE 100, which has got a rather more healthy glow to the start of the week than it had at the end of the week, where it sort of fizzled out. But we're above the old resistance on the way down, 76.40, and the longer we remain above that, the greater the chance of a move to not only the 50-day moving average at 77.65, but that February resistance line up to 78.50. Break of 78.50 would give us the unlikely scenario of a push up towards the top of that rising trend channel from September at 8,200, but I suppose hardly anyone is expecting that to happen anytime soon. If it did happen anytime soon, it would be by the end of next month, which I presume then everyone in the market apart from myself would be taking the credit for that move. But below 76.40, back down to the 75.20 area and that resistance line from March. But at the moment, not really looking for anything lower than that. Moving on to the DAX, and here we've got a very strong looking situation in the sense that we're back near the highs, back near the March highs, which we've done for the start of this month. Waiting for 15,700 plus to get us up to that next target, 16,200, which is the early September resistance line projection. Hopefully we'll get to 16,200 over the course of the first half of April. If we can get through that, then it is a steeper September line at 17,000. Maybe we can save that for the end of next month. But at the moment, 16,200 looks to be entirely possible, given the way that we've held the gap up higher from last Thursday. Moving on to the Dow, which has been the problem child, even more of a problem child than the FTSE in the recent past. Here you can see that we did manage to close the week through the 50-day moving average at 33,100. We're now looking for this market to get up to the one-year resistance line there at 34,000. That's been multi-tested and multi-failed over the last year, so it really is key that we get through 34,000. And I suppose one might also say that if we get through that line, it could open up quite a logjam of surprised bears trying to cover their shorts on the gloomy US market. RSI now well above 50, that's in the upper 50s, which is almost perfect for a continuation setup of the current recovery. This stage, the worst we're seeing now would be probably the 200-day line, 32,300, as that is currently rising, and it's actually quite close to the floor of that trend channel from October as well, so looking reasonably secure on that, as secure as you can be in current markets. Moving on to Bitcoin, where the wait for a move through 30,000 continues. It's continued for what feels like an eternity, but a nice looking bull flag here. Looks like a mid-move consolidation, and basically if it is, then we probably get this market rather higher than 32,000, just going for that as one is trying to be conservative. End of day close above 29,000 should lead to 32,000 ideally in the first half of this month. 32,000 the key level here, really marking the barrier between regarding Bitcoin as being half empty and half full after the declines from near 70,000 that we had over the last year or so. On the downside, an end of day close back below 26,600 risks a test of 25,000 and the 50-day moving average, but at this stage we're not looking for anything lower than that. On to the stocks, and stock which looks like it's getting back into gear at the moment is Angus Energy. Beautiful unfilled gap to the upside today above the rising 50-day moving average. In fact, if you look closely, I think the 50 and 200-day moving averages are both rising, which suggests that we're in a run-up to a golden cross. Typically, the run-up to a golden cross is the strongest part in the cycle, maybe hence the unfilled gap to the upside today. Initial target here just up to 2.1 pence, but we kick in with that golden cross run-up, we should easily get up to 2.8 pence by the end of the month, which would retest September resistance. But let's see if those moving averages predict the future correctly. On to our exploration, which keeps on exploring and finding oil, and probably has done it on a good day as well in terms of the oil price. With the OPEC production cuts, unfilled gap to the upside through the 50, well, through the 200-day moving average and just resting on the 50-day line now. With that gap to the upside, one would be quite confident that on this case, on this occasion, which is about the fifth attempt in recent months, we will get up to the top of that rising trend channel from back in May last year, currently pointing at 22 pence. Ideally, 22 pence is hit by the end of this month. Onto a stock which has had a few beatings in terms of the price action in the recent past, Belluscura. Here it's interesting in the sense that it looks like we've got a bear trap set up here. Want to see an end-of-day close or end-of-day closes above the old January support there, around 38 pence. And hopefully we'll get that during the week. If we do, then there's a chance of a move back towards the 50 pence area. That's backed by a bullish divergence line there, which has been tested now for the third time, or fourth time, in fact, if we look back at October. And so it's the bullish divergence that we're looking for, providing the momentum to a move to the upside. If you're cautious here, then I suppose some people might be, then you just wait for an end-of-day close above the 50-day moving average, as we haven't been above that since the beginning of the year. Moving on to Block Energy, where I see somebody on Twitter was slightly concerned that I didn't cover the stock in the RNS hot list. My bad, as the young people say these days. But on charting basis, it's looking rather good in the sense that we've got a bear trap gap reversal. The old low there in December was 1.1 pence, and we've pushed back above that. Unfull gap to the upside plus bullish divergence should mean that the shares have enough momentum to head up to the top of that broadening triangle from December at 1.7 pence. And that could be as soon as the next 4 to 6 weeks. If we're really lucky, it would be before the end of this month. So that set up a strong one indeed. On to a stock where I keep getting the research for the company, and I suppose it'd be churlish not to look at the shares now and again. Here we've got a great setup for, a great looking technical setup for Creo, in the sense that although we failed at the top of the triangle there back in February, we've managed to bounce off the now rising 50-day moving average, and I call that the sideways shuffle. Finding support at or above a rising 50-day line tends to be a very good signal, so we expect 40 pence hopefully by the end of this month, and perhaps a lot more given the way that we had an unfilled gap to the upside back in the middle of March. So a very decent looking setup there. We've also got the backing of January, February bullish divergence and an uptrend line there from that. So really all the boxes ticked there at Creo at the moment. Moving on to stock which is perhaps not in such a good place, but looking encouraging. You've got 88 Energy, which is up 20%, unfilled gap to the upside off the lows, and pushing through the 200-day moving average at 0.57 pence. More closes we get above that, the more confident we'd be for a retest of February resistance at 0.8 pence, perhaps as soon as the end of this month. If you're cautious, you wait for an end-of-day close above that February resistance line at 0.65, but understandably, you'd be giving away some of the upside. It's probably easier just to get on the bandwagon now with a stop loss near the lows if you are so minded. On to Jersey Oil and Gas, where I was pleading for the market to take notice of the situation here, and that was on Friday, and certainly has done that. I think we're up £1 since the RNS on Friday. The target here was up to 290, and I think so far the high of the day 282.5. So not entirely perfect, but not too far away either. As in terms of the target there, hopefully that will be hit over the next 24 hours or so, and we're still looking for further upside while we're above the old December peak at 267.5. So if we can get an end of day close above that, then we should get up to 290 either today or later in the week. On to another stock which I didn't include in the RNS hot list because I was overwhelmed by the tsunami of announcements today. Here we've got i3 Energy, which has, I think from a charting point, done exactly what the bulls would have wanted it to do. It's bounced off a 2-year uptrend line there, that one there from back in June 2021, hitting the lows there back in the middle of, or towards the end of last month, and now back above that line. The only thing left to do now really is to break the resistance line there from May last year, which is around, call it 22 pence, and above that we'd hopefully see the shares making an attempt on retesting the highs over the next 1 to 2 months. Potential target there up to 36 pence maybe by the end of May on i3 Energy. The upside valid certainly while we're above the 17 to 18 pence zone. On to Kodal, which has been great since it had its big announcement since back in January. Beautiful sideways consolidation there, and also the shares pushing through a sharply rising 50-day moving average. So we'd guess that this is now the time for the shares to make their breakout, i.e. during April. The top of the triangle there from June 2021 as high as 0.58 pence, and we're looking for that to be hit by the end of next month, and perhaps even sooner, given the way that we had the golden cross back in January, and both the 50 and 200-day moving averages are both rising well at the moment. Stock which seems to be in recovery mode, maybe unlikely for some, but still is in recovery mode from a charting perspective, is MGC Pharma. Here we had unfilled gap to the upside during the middle of last month, another gap higher, unfilled gap higher today. That suggests that we're finally turning around here, and with the RSI above 50 looking for 0.8 pence, perhaps as soon as the end of this month, while we remain above the floor of the gap there at 0.47. Ideally there's no price action really here back below the 0.5 pence area. Moving on to another stock which looks like it's finally making a recovery, Pires. Here you can see the shares have managed to deliver a, well, as things stand, a bear trap from below the January support there at 2.3 pence. End of day and end of week close above that, and we should be hopefully heading up to fill the gap down from February at basically 2.75 pence. That could happen over the next couple of weeks. By the end of the month, or over the next 4 to 6 weeks, looking for 3.3 pence at the top of that broadening triangle from back in December. Bullish divergence as well, backing that falling wedge breakout. So let's see if Pires can stay above the 2.3 pence area, which is the first goal for the bulls. Covered Saietta yesterday, and been covering it for a number of days. I did suggest that the chances here were for the shares to get back to the 80 pence zone. So far today they've gone up to 69.5, which is not bad given the way they closed around 44 pence on Friday. The view now is that the longer we stay above the top of that broken triangle at 58 pence, the greater the chance of a move to 80 pence. It'd be very surprising now with that unfilled gap to the upside and the rising 50-day moving average if we didn't at least retest or try to break that 80 pence area, even if we fell back after that. Bullish divergence there, and the neckline break in the 20s gave the game away in terms of potential upside. Onto a stock and a company which I've just interviewed again. Here we've got Tirupati, and I think I covered the stock very recently, suggesting that it was ready to move. We've broken neckline resistance there at 28 pence, and above that really looking for the top of that triangle from back in January as high as 40 pence, hopefully by the end of this month, and presumably even sooner given the way things are going at the moment. Finishing off with another recovery situation, this one which was requested. We've got Technology Minerals, which has hit the target we were looking for, 1.75 pence, basically at the top of that November triangle. And now we're actually trying to work out what the next destination may be. According to the upper parallel of that resistance line, we've got a fresh target now as high as 2.4 pence, which hopefully will be hit by the end of this month. The longer the shares stay above the 200-day line at 1.6 pence, the greater the chance of hitting that 2.4 pence target by the end of this month. That's it for me today on a much better day for small caps. More updates tomorrow.